Hello everyone, in this video, we will learn the difference between dividend yield and dividend payout ratio. Dividend yield tells how much dividend we get for the price we pay. As dividends are most of the time regular incomes, investors check this parameter while selecting a stock. Dividend yield also adds to the valuation of a stock. Investors are willing to pay more for the high dividend-paying stocks, which in turn reduces the dividend yields of the stock. To calculate dividend yield, divide the dividend paid in last 4 quarters with the price. We can also use dividend paid in last financial year, but it loses its relevance as we are away from last financial year, such as in second to fourth quarters. The dividend yield for Infosys is 2.5%. It means we are getting 2.5% as returns in the form of dividends. The dividend yield can change by either changing the dividend or when the stock prices change. Let's reduce the stock price to 1000. Now the dividend yield automatically increases to 3.5%. This means when stock price falls, dividend yield increases, which makes the stock more attractive. The investors start investing in the stock and price rises, which makes the dividend yield to decrease again. Now if the dividend increases to 50 rupee a stock, then also the yield increases. Again, investors find the stock more attractive as it is paying more dividend for the price. Investors buy the stock and the stock price rises, reducing the yield again. Dividend payout ratio tells the percentage of the profit that is paid by the company. It tells the growth mindset of the company. Higher the payout ratio, lower are the growth expectations as the earnings are not reinvested in the business but are paid as dividends to investors. In the same way, when comparing companies, lower payout ratio companies will be more growth-oriented. To calculate payout ratio, we divide dividend per share paid in last 4 quarters to the EPS of last 4 quarters, also known as trailing 12 months EPS. The payout ratio for Infosys turns out to be 46%. The retention rate is the percent of earning company keeps after paying the dividend. It can be calculated by subtracting payout ratio from 1. It is higher for the high growth stocks and lower for low growth stocks. I will be telling more applications of these ratios in future videos, so please stay tuned. Thanks for watching the video and please support by subscribing my channel. This is an AI generated voice.